Hey, what's up, guys? Filming for the third straight time. After this, I'm done for the night, so let's get into it. This one is not going to be from the book. This one is something I want to touch on, and it's CDs versus savings account, or in this case, we're going in order savings accounts versus CDs. So, number one, certificates of deposit are issued by a bank, credit union, but I'm going to get to that secondly. First things off, savings account. So, you're probably saying, well, yeah, I got a savings account with me. What's the big deal? So savings accounts we usually open because it's a bank account that earns interest, not a lot as you can tell. For me personally, every time I see my interest or dividend that they like to call from my credit union, it's usually maybe a couple cents, maybe a dollar probably now, but it's not a lot. Definitely not a lot. The thing is about savings accounts is that you put your money in there because it's rarely accessible to use. It's emergency funds. You might need to buy a car, put a down payment on it, put a down payment on a house. You just want to save up money in case something happens. Your tire might pop, you might have a leak in the house, you might have to pay for something. So a savings account is for you to withdraw money as needed. Yes, it can earn interest, but you put into a high yield one for that. So you can earn more interest than the average one. And another note I have written down about is that you may have a fee depending on withdrawal limits. So I don't know about you guys. My bank personally does not have a withdrawal limit because I have a credit union. But maybe for your bank or your credit union, you have a withdrawal limit. So say you can only do it 6 times a month. And after that, you're like, man, I have an emergency to do. You'll get charged like maybe $10 on a fee for withdrawing excess transactions. So doing an excess withdrawal over the limit, you'll get charged maybe $5, $10, who knows. But there's a penalty for withdrawing. Just as CDs, you can have a penalty for withdrawing early. But like I said, I'm going to get into that after this. So a savings account, your bank policy might say, well, we're going to convert it to checking, or we might have to close it out for the policy reasons. Now, with a savings account, you're just saying, okay, everything's good because FDIC insured things are backed for $250,000 at the most. So your money in the bank is backed up to that much. And a savings account, like I said, it's just for emergency things. That's the main thing of a savings account. It's for you to save, because you might have to make a big withdrawal soon or make a big withdrawal to take care of any needs or any down payments that you might have to make. And adding on to that, to get the most out of your funds, like I said, put it into a high yield savings account. It's not much. It's usually, I think, the national average is like 0.333%, but you'll earn interest regardless. So you're earning, but it's not as much. Now, certificates of deposits. They are usually, I believe that there are other money instruments that you can deposit to pay higher interest, than a savings account. So banks, credit unions offer this. I'm trying to get the whole terminology right. I don't want to be too technical with you guys. I just want to be simple with it. So it's a deposit that can pay higher interest than a savings account. Yes. And it's exchanged for you restricting the funds over the term period of the CDs. So CDs have a maturity between 3 months to 5 years. And within that time period, you're restricted on taking that cash out because it's accumulating. And the longer the CD, usually the better offer rates than the savings account. So like I talked about, the longer the maturity, maybe have higher rates. So maybe the yield is lower, or maybe in the long maturity, you'll see that the yield is higher because the rates are lower. So it just depends. But for CDs, usually it has a higher payout in terms of interest than a savings account. But as I said, there are penalties. I don't know the specific fees that comes from your bank, your credit union, wherever you deposit money to, but there will be a fee for drawing early. Just as you do from your 401k. You take something out early, you get the 10%. So keep in mind, and this is a big note, CDs allow you to lock in a rate for the term. But if the rates are low, then that's good. So you may get a higher payout. But if the rates are high, that payout is lower and you might earn less. You might earn less. If the rates are higher, you might earn less than what you were going to put in that savings account. It just depends because it is possible. that whatever you invest because of rate changes, you may earn less than what you put into a savings account. So just remember that in order for you to take advantage of a certificate deposit, because they have maturity dates, do a CD ladder. So this is for information. I'm not recommending anything. Remember, SEC, FINRA, don't come after me. I'm not recommending anything. I'm just saying the information that you can do, what you can do. And a CD ladder is opening several CDs by varying term lengths. So what I'm trying to say is that you can open various certificates of deposits with different maturity dates. So the ones that are in the short term, once they mature, you invest that into the long term CDs, so that way you can have a higher rate and then they come out to having more money. So instead of trying to put everything together in one bunch or all your eggs into one basket, put it into different baskets. When one basket accumulates, jump to another and then jump to the other. And then you will have more money overall. So between savings accounts and CDs, the main thing to take away today, I would say, is that savings accounts, they're just for emergency funds. You could save up, you could earn interest, but it's low. CDs, you're restricted access on your funds, but if you have some funds to put away, you don't want to put them in the market, put them in a CD. Just say, well, I don't want to really have it in the savings account. I can stash this over into a CD, let it accumulate, and then make some money off that from the bank or the credit union. So yeah, guys, that's certificates of deposit versus a savings account. So if you want to do either or, that's your choice. But I have a savings account. It's cool with me. Don't have a CD, but I might look into it. So thanks, guys, for watching, for tuning in. This was short, simple, to the point, and I will see you guys next time. Thank you.